Let's see. Start off with Tesla real quick and do a quick review. Be super quick because I gotta bail. But I'll look over where we're at. Looks like we got a nice little bounce on NVDA and a few other things in pre-market. So I'll just show you the levels to keep an eye on. Tesla, same thing. We're in this zone, right? Same consolidation zone, like what we've seen previously. So watching that. Let's see. It's over here. It's trying to pop up on my screen. So, same consolidation zone. Looking there to see if it rejects. I might sell a couple more covered calls here. We'll see how things go. But as of right now, that's where we're at. Let me jump over to NVDA since we're getting a little bit of bounce in pre-market. Yeah, you can see here, even with that little bit of bounce that we got going on pre-market, it's still very much broke this trend line. This shorter term one we rejected off this trend line, so you'll want to watch that and see how it goes from here. Potentially have a head and shoulders pattern building right here as well. Left shoulder, head, right shoulder over on this side. So if we get a neckline breakdown on that, I would be watching for a harder break. I'm going to go ahead and draw this here so we can keep an eye on it. And that's a really conservative line, by the way. You can see I drew it off the wicks, but if we break down from that support right there, we're going to test this trend line. And if we break that trend line, we're heading to 101. So be careful on NVIDIA right now. Semiconductors are showing a lot of weakness still, so definitely want to be careful there. I think those of you that entered the covered calls or sold covered calls that I alerted off of your NVIDIA shares, we're up like 35% right now already. So that's the beauty of hedging your longs. Let's see, what other tickers real quick? Since we're going quick. China pump, Moorhead. So you're seeing a pump on that because they just flooded stimulus into the Chinese market, similar to what we saw in 2021 within the US. So that is where a lot of that pump you're seeing on the stocks like PDD, Alibaba, Neo, several others. It's because the stimulus is flooding into the market. I wish I would have left more of my long-term calls on Baba. I've still got a few, but keep an eye on it. I don't typically mess with a lot of Chinese stocks just because, like Baba's one I'll do, but a lot of the others, you've got such tense regulations that pop up out of nowhere between the US and China that it can kind of cause a bit of chaos. So swinging calls on especially high risk things like Neo be pretty dangerous. I tend to steer away from doing those nowadays just because there's so many other tickers that I can trade that are safer. But let me look at QQQ and SPY real quick. Yeah, you can see QQQ still has this head and shoulder setup going on. We broke down from this trend line here in the uptrend. We did break out to the upside of this trend, which I can look at on the daily for you, even though it's not going to show the pre-market movement. But you can see, right, that yesterday's big red candle, which some of that is because the port strike, some of that is just overall the weakness has been showing for many of these tickers, and the whales have been positioning for a drop. So y'all have heard me mention that multiple times. You can't just trade based off only the bullish hype. You need to take into consideration what can happen in the meantime. So like I've mentioned on other videos, I'm not bearish, but also I'm going to hedge accordingly, and I'm not going to swing something overnight like a shorter dated call whenever there's higher risk in play. So keep an eye on this. We've been scalping a lot of QQQ calls and puts lately. So I will trade this accordingly once we see where things move after open. But we do have a bear flag formed across the intraday on most of these tickers, which it looks like it's still going to be respected today. So we'll see if we get a little pump and reject. But I'll drop all the chart, like screenshots of the charts and the levels over in the ticker specific channel so people have them. But here we've got the same thing going on. Watching these levels, these are minor support levels and resistance levels, the yellow dotted. The more significant levels you want to watch here on QQQ are going to be like the purple gap fills that we tagged. You can see those held as solid support, but that's still bear flag. So be careful, because bear flags, for instance right here, when you get these big drops, you consolidate, and then if we break the support at that range, you go down more, right? So same thing going on there. SPY looks similar. but we're still up in this highs range just because that's where SPY is right now. So remember, underlying top weightings drive indices and not the other way around. I'd like to see this previous high level hold. Sorry for all the extra lines here. I guess I can remove the minor supports. I'll add them back if we trade anything on it. But we could still hold that range. Technically, that bullish breakout there is nice. And you can see my target's still up there if it can hold and continue upside. But with all the current macro level events going on, and like I get the Iran and Israel thing's been going on for thousands of years. That being said, you currently have multiple things happening all at once that you want to be careful of. So I won't be swinging calls on SPY here. The risk to reward's just not worth it for me, but definitely worth keeping an eye on. Apple. So Apple could totally head towards this gap fill. See it right there, that it's consolidating a bit. If it can't hold that minor support there, which is becoming potentially a major support since it's got multiple taps, but we can head towards that 221.71 gap fill right there. So definitely worth keeping an eye on. Moment. That range can be a bit rough on Apple, and it does reject. You can see here it's rejected at that level multiple times previously, which is why we traded puts off of it. Same thing over here, consolidation, bear flag, breakdown. So if we break out to the upside, that's great. It invalidates that bear flag. If we break down, your price target is the measured move of the pole. So keep an eye on that with Apple. Google real quick, since I know some of us are swinging puts on it. So here's my thing on Google. Right now, the well movement's still showing people are bearish at the current level, which aligns with what we saw kind of back here, right? 167 is the key level that I typically watch at this range, because historically that level's been the make or break for it. You can see, for instance, if you look on the daily chart, while it pushed above 167 over here, it ended up not confirming with daily candles, and it ended up rejecting back below it. It's the same thing here. We rejected back below 167 yesterday, and I know we scalped some shorter dated Google puts for like 20-something% gains, and then I started phasing into some longer term puts until we get some kind of confirmation one way or the other. But as of right now, it's at risk of breaking this trend if it can't hold it, okay, and rejecting at the 167. It's got this gap lingering right now at 160.50. So if we reject or we break right here today, it's very likely going to tag that 160.50 level either today or tomorrow. And then you got another gap right here at 158. So keep an eye on those two levels. Those are definitely some key levels to watch. It's forming a potential inverse head and shoulders here, but just like I mentioned back when we were over here, you don't trade calls until you have confirmation. If you traded calls or entered calls in this range, you got burned because it never got its breakout above 167. So jump over to Microsoft. Yeah, I got it. So Microsoft, same super clean head and shoulders pattern we've been watching. One thing you can watch as well right here on Microsoft that I'll go ahead and mark for us. I'm going to do this on the daily actually. This trend line right here. Keep an eye on that to see how it handles that test, because it looks like we got a little bit of a bear flag forming here, just like on some of those other tickers. If we break down from that bear flag, the test is going to be, let me jump to the 1 hour so you can see it a little bit better. We break down, and sorry for all the minor supports here, I'm going to leave them in case we scalp it today, but if we break down from the bear flag here, the measured move would put it, was it 2.25-ish? Like somewhere in that area there, but I'd be looking for this test. See how there's confluence here? Move this out of the way. See how there's confluence here between the uptrend line and the support level? That 414 would be my level of target if we break down from this current consolidation bear flag, because that's a $6 move. You can actually make really solid gains on Microsoft with the $6 move on some puts, but definitely would want to watch that typically when it breaks down from this level, it tags at 414 fast. You can see example there. That one went way down, but yeah, if it breaks this trend line, it's going to get rough. And then if it breaks, of course, the neckline that we've been monitoring further down, it's going to get really bad. So keeping an eye on that, just to see how it shakes out in the coming weeks, months. But yeah, one or two more tickers real quick. AMD, yeah. So AMD got bullish and bearish stuff going on with AMD. So what I'm watching for on AMD is this right here. Like we traded those puts yesterday, which was more of a short-term day trade and worked out really well. What I'm looking for to see is if it holds a breakout above that trend line. You can see here, which would potentially give us the bounce and move to 175 range and that gap fill. If it rejects back within that trend line, though, it's a great opportunity. Once you have confirmation of the rejection, great opportunity to trade within that downtrend it's currently in. So you could buy puts, and an easy target within that range is going to be, you get the rejection, the 150 level is easily within reach. From there, you potentially would test the shorter term uptrend as well. I'm going to make this one dotted so we can tell the difference, or dashed. But yeah, that 150 range would be the first price target if it rejects within this trend again. From there, y'all can see, like, when this thing rejects off the trend, it's rough, especially with semiconductors right now not doing so hot. Keep an eye on this. AMD options are honestly really easy to make solid gains on, so I'll be watching that closely. I'm going to delete these minor resistance and support levels, and we can add them back if we end up trading something shorter term. But more significant levels for the time being are those major levels. And we will look at one more ticker, and then I got a bail. Actually, I'll go ahead and wrap it here. If anything else comes up, you don't need me to check it, just let me know. I'll pull the charts midday.